Welcome to the JRD Solution YouTube channel, where financial education meets real transformation. Applying for a business loan can be exciting. It often represents growth, expansion, and new opportunities. But for many entrepreneurs, that excitement quickly turns into disappointment when their application gets denied. The good news is that many loan denials happen because of common and avoidable mistakes. In today's video, we're covering the 5 biggest reasons business loan applications get denied, and more importantly, how you can prepare your business for better funding opportunities in the future. Number 1, poor credit history. One of the first things many lenders review is your credit history. A poor credit profile may suggest missed payments or difficulty managing financial obligations, which can increase a lender's perception of risk. While every lender has different approval criteria, maintaining healthy credit habits can improve your overall financial profile. Paying bills on time, reducing unnecessary debt, and reviewing your credit reports regularly are good habits for any business owner. Credit isn't just a number, it reflects your financial responsibility over time. Reason number 2, insufficient business financial records. Another common reason for loan denial is incomplete or poorly organized financial records. Lenders typically want to understand how a business is performing financially. Clear bookkeeping, accurate financial statements, and organized records help demonstrate that your business is being managed responsibly. If your numbers are inconsistent or difficult to verify, lenders may have trouble evaluating your business. Reason number 3, high existing debt. The third reason applications may be denied is carrying too much existing debt. When a business already has significant financial obligations, lenders may question its ability to comfortably manage additional payments. That doesn't necessarily mean debt is always bad. Many successful businesses use financing strategically. However, maintaining a balanced financial position and avoiding excessive borrowing can strengthen your business profile over time. Responsible financial management shows lenders that your business understands how to grow sustainably. Number 4, lack of business history. New businesses often face additional challenges when applying for funding. That's because lenders usually have limited information about how the business performs over time. An established operating history can provide valuable insight into revenue, expenses, customer growth, and overall stability. If your business is still new, focus on building a solid foundation, maintain organized records, develop consistent revenue, build strong customer relationships. Over time, these efforts help create a stronger business profile that may support future funding opportunities. Number 5, weak business plan. A great business idea alone isn't always enough. Many lenders want to understand your business goals, growth strategy, and financial planning. A well-prepared business plan demonstrates that you've thought carefully about your operations and future direction. Your plan should clearly explain what your business does, your target market, how revenue is generated, and how funding will support growth. The stronger your planning, the easier it becomes for others to understand your vision. Preparation often creates confidence. Confidence often supports opportunity. Number 6, how to strengthen your business before applying. Before applying for financing, spend time strengthening your business. Review your financial records. Improve your credit habits. Reduce unnecessary debt where possible. Maintain a dedicated business bank account. Keep your business information consistent and professional. These steps may not guarantee approval, but they can help present your business in a stronger position. Successful businesses often prepare long before they submit an application. Preparation isn't wasted effort. It's an investment in future opportunities. Number 7, think long-term. A loan denial doesn't necessarily mean your business has failed. Sometimes it simply means more preparation is needed. Many successful companies faced setbacks before achieving long-term success. Use every experience as an opportunity to improve your business foundation. Continue learning. Continue strengthening your finances. Continue building your reputation. Every positive financial habit contributes to future opportunities. Long-term success is built through consistency, not perfection. Number 8, how JRD Solution helps. At JRD Solution, we believe financial education empowers entrepreneurs to make smarter decisions. Whether you're learning about business credit, financial planning, taxes, or funding strategies, education helps you build confidence and avoid costly mistakes. Our mission is simple: to educate, empower, and equip business owners with practical knowledge that supports long-term financial success. The more you understand business finance, the better prepared you'll be for future opportunities. Knowledge creates confidence, and confident entrepreneurs build stronger businesses. If you want to learn more about business credit, financial education, entrepreneurship, and wealth building strategies. Visit our website today, www.jrdsolution.com. And don't forget to subscribe to the JRD Solution YouTube channel for more practical business and financial education. Thank you for watching. Educate, empower, execute.